everybody. Thank you very much for inviting me to come here today. I should say, just to kick off with, that I am not a journalist. I know nothing about journalism at all. I look at all this from the other side. So I'm an ombudsman. I'm going to tell you a little bit about ombudsman in case you don't know. But actually, by training, I'm a lawyer. I call myself a reformed lawyer because most of it's been knocked out of me. I've been in the ombudsman world for, I regret to say, something just over 30 years now, and I've probably forgotten everything that I ever knew about law. But we have a really thriving financial media in the UK of all different sorts, and at the Ombudsman Service, one of my jobs is to connect with it, so I have a lot to do with it. So I'm really pleased to be able to come and share some experiences with you today about the experiences we have of the media, the perception of the media, and the good and bad things that can go on. And something about the media in the UK. Well, I was chatting to Malcolm Nowdy in the car coming here, and so I'm not sure I need really bother with this slide, because I think what I'm going to tell you is exactly the same as you will know here. Television is where most people get their news these days. So that's 75% of people say they get their news from television, but reducing numbers of people actually read newspapers. I read a newspaper, and I like to read a newspaper on my commute in the morning, but quite often there aren't any newspapers at the station, because I suppose it's not worth their while to have them there, because it's not a popular way. So only about 40% of people these days get their news from print. But lots more people, of course, particularly the young, and the young count statistically as from 16 to 34, they get their news online. There's social media. People learn things from their friends rather than going to what might before have been trusted sources. There are blogs. And then, of course, there's the citizen journalist, which I don't know if you have them here, but they are increasingly happening in the UK, that people just go off and do it themselves. So it's probably a changing pattern, but I imagine a changing pattern pretty much across the world. But whatever the medium is, in the UK it's extremely active, and we have specialised financial press, and it doesn't matter which particular medium you're looking at, there's a specialised financial bit in all of it, and very active. Very influential, a lot of campaigning for the public good, bringing things to the attention of people that they wouldn't otherwise have recognised, and fulfilling, I think, a really useful job in translating. Because financial affairs are not particularly straightforward. They can be some very, very complex issues, and for a medium to be able to translate this so that ordinary people can understand it is great, because I don't know what it's like in Malta, but in the UK the average reading age is 11. By and large, on an everyday basis, finance is not something that people get excited about. They don't know how their pension works. There's some structured products that are so complicated. I've dealt with complaints where it was quite clear that the advisor selling the product didn't understand how it worked, let alone the poor benighted consumer who was buying it. So it's not an exciting topic, but that's a shame, because of course it's hugely important. You need your savings, you need your pension, you need the mortgage you're buying your house with, so you actually need to try and make it interesting. And as I say, I'm not a journalist, and I'm not trying to teach any journalist in the room how to do their job, and you know this probably as well as I do, but the way you make it interesting is by illustrating things, by giving case studies, by humanising the problems that you're looking at, and getting things that will let the reader or the listener or whatever connect and empathise and understand, actually just get interested in and want to know a little bit more about what's going on. So, what do we see in the UK press? We see quite a lot of this. What these people are, I can't remember their names, but they're both 83, and they took out some years earlier what's called an equity release loan. You may have them here under a different name, you may not, but it's a loan that you borrow on the value of your house that doesn't have to be repaid until either you die or you sell the house. And so they took out a loan of £43,000 and they bought a little boat, which they very much enjoyed. But a few years later, they were old and she needed care, so they wanted to sell their house to go into a care home. Of course, as you can imagine, once they did that, not only did they owe the £43,000, but the rate of interest had rolled up and they had to pay a penalty of £16,000 because they wanted to get out of it early. And so it was going to cost them about £150,000 for a £43,000 loan, and that was half the value of their home. So this made a great story. A great story. Actually, of course, there's absolutely nothing wrong with any of that. You have in the UK, when you take out this sort of product, to be legally represented so that you understand what you're doing, which they were. They'd had the benefit of the money. Within the terms and conditions, the business was doing nothing wrong. So, you know, nobody really was going to be able to help them. But what it was just a really good way into the story. So you've got Mr. and Mrs. Thing here on their wedding day. You've got this story, and then you can get into actually a discussion of what this loan is all about, the pitfalls of it, the things to look out for. And so the article, which started off just about a couple who were in an unfortunate position, ended up with a really useful discussion about the issues. Not dry, but connected and humanised, and some very good and helpful warnings for other people who might be considering doing the same sort of thing. So a case study to illustrate the problem, a really responsible article, and a very good thing. So that's a good one. Not all like that, of course. It wouldn't be, would it? So there's another approach. There's the emotional approach. So this was a case that was with us for a while. If you can't see the headline at the back, it says "Victory for family after friend's life forced to pay out the £100,000 life insurance claim that father died fighting for." So, well, that's a little bit emotional to kick off with, isn't it? We had this case. The consumer was suffering from cancer. And he claimed on his critical illness and life policies, and the insurance company concerned refused the claim on the basis that he hadn't disclosed certain medical information when he applied for the policy, and if he had done, they would never have insured him in the first place. Sadly, he died. Now, this got picked up by social media. I don't know if any of you have ever heard of a British actor, or I think he calls himself a comedian, a film star called Stephen Fry. But he got heavily into this, all on the social media, lots and lots of blogging about how disgraceful it was that this insurance company was denying this man the money and then his widow the money. It was a very, very sad story. He was only 44 and he had young children when he died. You know, that's sad. But actually, we should all be a bit above that. I think everybody should be standing back and not just pressing buttons marked emotion. Because all the people who got into this social media campaign, which then got into the regular press, they knew nothing about anything. They didn't know what he disclosed when he took out this policy. They didn't know what his medical conditions were. They didn't know what the terms of the policy were. They didn't actually care very much because they got a great story, even though it might be quite irrelevant. So I spoke to this business because we had the case. It hadn't been decided. It hadn't actually even been looked at that stage. And I called them not because I was going to tell them that they got to pay up or anything like that. I didn't know at that stage whether or not they should. But what I wanted to say to them was, if you have refused this claim so far, what I want to know is that if we support you, you will continue to refuse the claim, because if we say, yes, the business was right, and you then decide you're going to pay it because you don't like the fuss in the press or the social media, that undermines me as an ombudsman and as an institution. And we never got to decide it because they paid up. Now, I have looked at it since, and I don't think I would have made them pay it because there was quite clearly non-disclosure, and I don't think that they would have accepted him as a risk. But they paid it anyway, so it worked, I suppose. The consumers got their money, but I just don't think that's right. And I think things should be done properly, and I really didn't like that at all. So I don't think that was responsible. Whether you do or not, I'd leave that for you to decide. But there we are. But what the media can do that is really useful is warn people, because there are a lot of things going on. Once again, if you can't read that at the back, the headline is, I lost £17,500 in Phishing scam because I didn't watch the One Show. The One Show had publicised this sort of fraud. It's very clever, actually, really clever, whereby somebody will ring you up and say, this is your bank, there's some unauthorised activity on your account, but don't talk to me because I could be a fraudster. So put the phone down, call the number on your card, and then you will get through, you'll know you're talking to the bank. So the consumer puts the phone down, they get the card, they pick it up, they dial the number that's on the card, but the fraudster has left the line open all that time. So when the phone is answered, they pretend they're the bank. So the consumer's reassured because they found the bank. And then they will do, of course, what the bank tells them to. And the bank says, don't tell me your password. You must never tell anybody your password. Just enter it through your keypad, which, of course, they can pick up through some computerised trick. They can pick that up. And then they will help themselves to people's money. And the bank will not have to give them their money back because the bank has simply followed their instructions. And we probably can't help them either. It's only very, very seldom that we can help people. So they do lose a great deal of money. And it's a particularly cruel scam, this, because it's usually used for the elderly who think they're doing the best things, who are panicked because they think if they don't move their money, they'll lose it. They think they're doing the right thing. So it really is very cruel. But we published one of our insight reports about phishing, and all aspects of the media loved that because, once again, there were lots of case studies in it. It was a really valuable thing to warn people about this because the chances of them ever getting their money back are so slight. So that was hugely important, really, really valuable work that the media did with us there. Some other things that we've got going on at the moment, which are getting, again, really useful attention, are things like parties. So your insurance, your household insurance policy will probably exclude any damage caused to your property by people you've invited in. So if you have guests and they damage things, well, that's probably not going to be covered. So what happens when you go away for the weekend and you leave your daughters at home and they put on Facebook that they're having a party and you come back to find the house has been trashed? It's a really interesting question. I don't think we've had a case, so we haven't got an answer to it, but it's certainly something that people really need to think about. Fortunately, my daughters, I hope, fingers crossed, are too old to be doing that, but I should be very cross if they aren't. Another thing that has just come up in the last couple of weeks is mobile phones and selfie sticks. So if you've got your mobile phone on the end of a long stick so you can take a selfie and somebody rides by on their bicycle and grabs it and steals it, or you drop it in a lake or something like that, should your insurance cover that when you are actually could be said to be taking a particular risk with your property? So it's all good things that make people think, and all this kind of humanising problems is it's really good for us. It's good I think for the media because they have a ready supply of information, and of course it's very good for consumers too. So that's probably the working together, I think, has been really valuable for all of us. So I just want to finish off by saying a few words about looking forward. Everything's changing. Everything is changing. You can get your news since you don't get it from a newspaper anymore, which used to come in the morning, you get your news 24/7. You can buy things 24/7. You can use your mobile phone or your watch to pay for things. You can do it whenever you like. You don't want to be constrained. People don't want to be constrained anymore. We don't run a 24/7 operation. We couldn't afford to do that. It would be vastly expensive. But what we do is we now have our inquiries section, which is open for 12 hours a day. So that's 8 till 8. They open on Saturday morning, and we are accessible through web chat and through our website all the time. I mean, you won't get an answer, of course, but we can take inquiries in, and we deal with social media. Most of the time, we actually say quite late on a Friday, we'll be back on Monday morning, because we don't want to pay people to man the social media desks over the weekend. But so we are around all the time, and people want results really fast too. So that means we're having to change quite a bit in the way we deal with complaints. We have had lots of processes. We've been very process-driven in the past. As you have to be really when you are a large organisation. When there were 4 of us, it was really easy, because if we had a problem or we wanted to know what we were doing, we'd go down to the pub at lunchtime and talk about it. You can't do that with 4,000 people, so you have to measure things and record things and all that sort of thing, and it just comes between you and the person you are trying to help. So we're trying to get rid of all that, to introduce much greater informality, to do much more work over the telephone and that sort of thing. Because we have to be relevant, and if everything else is changing, we have to change too. At a conference last September, a room like this, full of ombuds people, and I did say, who of you thinks that you will be doing the same job in the same way in 5 years' time? And half of them put their hands up, which I was horrified by, because they're just not. And if they don't realise that and they don't change, they're not going to be doing anybody very much good, I think. And of course, the way news is delivered too will continue to change. You know much more about that than I do. We've already discussed the fact that the print market is getting very much smaller. But I think the way people look at things is too. We have done lots of work looking at how you share knowledge, and people these days have the attention span of a gnat. They really do. Nobody will read a long article anymore. I know that even though I like to think I'm quite bright, if I get something, if it doesn't have an executive summary, so I can at least work out which bits I want to read, I'll probably bin it. And that's disgraceful, but that's how it is. So, you know, the really long considered articles like you used to get, probably still do in The Economist, they're not going to exist, because that's not how people want to get information. That's really not what they want to do. And I don't think that in 10 years' time, I'm absolutely sure none of that will exist at all. And then, of course, there's financial services and how the world of financial services is going to change. And that's interesting too, and causing a bit of panic actually, because I go to quite a lot of conferences where people are talking about the future and what's going to happen. And the future is kind of a bit uncertain, but I think people know the general direction that they're going in. So one of the things I like to encourage people to think about is driverless cars. Now, Google has stated that their driverless car is going to be on the roads in 2018. Well, that's not very far away. I'm quite interested by that, because I did read something the other day that they're having testing of these driverless cars at the moment, and there are 44 of them driving around California, bumping into each other. So I think they may have an issue or two to sort out before actually this becomes a mainstream thing. But just think what that means for motor insurance. You know, that will create some interesting problems. Who's in charge? Telematics. I don't know if you have telematics, if that's a popular thing in Malta. Jeffrey's nodding, so no, not that much. Increasingly so in the UK, because the cost of motor insurance, if you are a young man, is astronomical. Really dreadful. Not so bad for young girls, but for young men it's very high. So if they have one of these black boxes in the car that records exactly how they are driving, that can make a big difference to the cost of their motor insurance. And so when you actually know what people are up to, I mean, it's all very Big Brotherish, really, isn't it? That, you know, they know if you park your car where you say you park it, they know if you actually do go over the speed limit and things like that. It's all a bit worrying. Banking, if you use your phone or your watch for mobile banking and something goes wrong, whose fault's that? Is it the banks? Is it the mobile phone provider? Boundaries are getting blurred. It's not as easy as it was when we started to say that's a banking problem, that's an insurance problem. It's not like that anymore. It's getting much fuzzier around the edges, really quite difficult. So that was what I wanted to say to you. I've got a slide here for questions, but Malcolm, you might prefer to leave questions until the panel session. Okay, I will leave you there.